Good morning, ladies and gentlemen, and welcome to the INNOVADERMA PLC investor presentation for the half-year results ending 31st of December 2020. Throughout this presentation, investors are in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. You'll be notified once these are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Blake Hughes, CEO of INNOVADERMA PLC. Good morning, Blake.
Good morning. Thank you, Paul. Hello, everyone. I'm going to start just with the camera on just for a couple of minutes, and then I will turn it off so that we can focus more on the presentation. But I wanted to add my welcome to the INNOVADERMA interim results presentation for the 6 months to the 31st of December. As Paul has said, my name is Blake Hughes, and I'm the CEO of INNOVADERMA. So what I suggest we do is let's get started. I'm going to turn off my camera, and here we go. So, moving over the disclaimer to the agenda. Today I will review our results, but perhaps more importantly, I'll share with you our plans for how INNOVADERMA will emerge from the pandemic as a stronger business, having addressed many of the weaknesses of the past to ultimately create a company ready for rapid growth. So I'll start off by talking a little bit about new INNOVADERMA and what we are. I'll then go through the business highlights, over the financial highlights. I'll then spend probably the bulk of the discussion period talking about the strategy and my findings since I arrived as CEO back middle of November, or what I've found and what we're going to be doing, and particularly doing differently moving forward. We'll then finish with an outlook and talk a bit more about the exciting opportunity I believe there is for INNOVADERMA in the future. So a lot has changed since INNOVADERMA was last presenting to you, and at its heart is a brand new leadership team. So let me introduce them to you. So obviously you have myself, Chief Executive, 25 years in the beauty industry, and really I think what I sort of bring and why I think I was chosen for the role, but also why I've accepted the role, is that my background has this combination of strong brand strategy and e-commerce execution excellence, a data-driven analytics, but also a UK-based international expansion experience. I think those four criteria are what INNOVADERMA need, and that's why I'm here. I'm joined recently, just within the last month or so, by Andrew Dunderdale, our Group Finance Director. He's not on the call today, but you'll be seeing a lot more from him moving forward. He's UK-based, importantly, and will be leading our finance function and brings extensive experience in the PLC management. And again, you'll hear a lot more from him over the coming days and months. I'm also joined by a strengthened and renewed board. At its head is Ross Andrews, who brings obviously extensive financial, commercial, and corporate governance experience. But importantly, also relatively two new non-exec directors, Simon Piper and Mark Ward, both of whom have joined within the last 6 to 12 months, and ultimately bring with them that marketing and digital expertise that is going to be so important to the business going forward. So overall, if you look at the team, and this is probably one of the biggest differences versus the past, we have the right skills and the right experience in the right location. We're now UK-based to complement our UK-focused business that we have today. But I think importantly, and probably one of the biggest changes from the past, is that we have the right pace and agility to operate in a digital and e-commerce environment. You're going to hear a lot about digital and e-commerce from me today, because that really is the focus for the company going forward. And I think it's important that we have the right leadership and leadership experience to enable that. So we've talked a little bit about the team. Let me explain a little bit more about our renewed mission. And so again, really I sort of put it into sort of 4 points. Firstly, to create innovative and high-performance products that delight consumers around the world today. I mean, key points I would pull out of there are innovative, high performance, and that global aspect of around the world. Those three aspects will be really important to our mission going forward. Secondly, we've got to build one of the fastest growing e-commerce focused and digitally enabled companies in the UK. At its heart, INNOVADERMA is an e-commerce focused business. I'm going to talk a lot more about that over the coming slides, but again, it's perfectly positioned for moving forward to take advantage of the trends that COVID has really accelerated. And again, our objective is to become one of the fastest growing businesses in the UK. To be seen as an employer of choice and to provide our team with a fantastic opportunity to develop and grow. Again, really, it's building on the entrepreneurial spirit that has seen this company grow from a small size to its size today, but overlay that the right leadership and the right coaching to enable people to achieve their potential. And then finally, to be transparent and ethical in everything we do. For a long time, I think we've talked about the ethical nature, and we are vegan friendly, we are cruelty free, but our objective is also to have more of an open, honest and transparent conversations with our consumers, but also with our shareholders. So in a nutshell, that is our mission. But so let's talk a bit about the company DNA that will get us there. So really at its heart, this is what the company is going to be about, if you will. It really builds off the entrepreneurial background of the company, but overlays that expertise in digital and e-commerce to really strengthen us going forward. So again, we are passionate, digitally focused beauty entrepreneurs. Our brands target areas of consumer need currently undercatered for. I think this is important. We don't aim to go up against the big guys directly. We think there is a lot more value in the market to be had by looking at these undercatered consumer need groups and targeting them. Skinny Tan at its inception was a tanning brand that brought innovation to an under-innovated category, that was not afraid to talk to an older tanning consumer at a time where the majority of communication was still aimed at 18 to 25-year-olds. And that would be a classic example and a classic blueprint that we'll look to take moving forward. We create innovative, consumer-centric, high-performance products. Again, I've mentioned that previously, but I've repeated it here because I think it is at our core. Skinny Tan and Wonder Serum, as an example, was an innovative product. Innovation in beauty is the heartbeat of a business. And again, coming with breakthrough innovation or consumer noticeable different innovation is central to that. I'll talk a bit more about that in a couple of slides and give you some examples of our recent innovation and why I believe it's doing so well. But the second side of that, of course, is also the high performance. We are a premium price products that deliver a different experience to mass products. We have industry-leading digital and social marketing expertise. This is what has built the company. We have a strong foundation. We will look to build on this more. And we have proven multi-country scalable e-com model. Again, Skinny Tan has now has a multi-continent proof of concept, and we'll be looking to replicate that with the rest of our portfolio, starting with Charles & Lee. So again, you've heard a lot about digital and e-commerce. This is going to be one of the crucial bits that I'll talk a bit more about going forward. Before I get into the results, I just also wanted to share a couple of bits about recent interventions. This is a question I often get asked the most, having now been in the business for just over 4 months and really, that 100 days plus. I thought it was worth putting in here, just sharing some of what has happened. This doesn't necessarily reflect in the period of July to December, but I think it's important that as investors, everybody understands what I've been working on as well since I joined. So obviously, we've already just talked about significant strength in the leadership team to position us for sustainable and profitable growth. But also beneath that, there's been an implementation of a series of initiatives to reduce cost and drive margin improvement. Overhead cost reductions, examples being obviously looking at our use of consultants and how we manage that, looking at our cost base in terms of offices, travel, etc., and really trying to make sure that we cut our cloth for the world in which we live today. Lower year-on-year inventory. It's been a challenge for the company historically, and something that we're focusing a lot more going forward, and I will be sharing a lot more about this in future presentations. Higher gross margin promotional hurdle rate. Again, a lot of you will have seen what I have, is that sometimes the promotions have chased themselves lower. We now have an internal method of ensuring that all promotions are meeting the criteria, basically an in-stone promotion strategy. And finally, new products sold at full retail price. Again, where we've got that innovation, making sure we take advantage of it. Other areas include digital marketing optimization, where we've increased digital marketing investment hurdle rate, what the return on investment that we're looking for, but equally looked at lower cost digital targeting of existing customers by increasing our use of email marketing, etc., to our established database. The final piece, and a really crucial piece in a business that is, as you know, 70% plus e-commerce, is what we actually look like in terms of the execution. And just recently, over the last couple of weeks, you will have seen some major Skinny Tan site improvements, which is already delivering significantly improved results and conversion. So let me take you on to the business highlights for the period to end December. Firstly, we all know that the UK has been significantly hit by COVID, but I think it's also important to say that the INNOVADERMA isn't a UK-only business. So we've seen some real strength in our key international markets, with the Australia growing significantly, as well as the US. And we expect and hope this to continue moving forward. The UK revenue decline has been as a result of COVID, and I'll have a specific slide just to talk you through how COVID has impacted our business in a moment. But I think one of the pleasing pieces is that the impact of it is less than what we've seen on the overall category in the UK today. New product development performance has been strong, I'd say very strong actually, and I'll share with you the most recent couple of examples of that. Perhaps slightly less sexily, but equally as important, we now have a new ERP backbone system, which is delivering us real-time insights from both a financial as well as overall business operation systems, which ensures that we can rapidly adapt to consumer demands. And finally, post the period, but I think very important to mention, is that obviously we have the £4 million placing and £500,000 open share offer that we announced in January. It's expected to close by end of April, with prospectus being sent out early April and a general meeting planned for to mid to end April. So I mentioned earlier that I believe that new product development is at the very heart of a strong and successful beauty business. And it's one of the main reasons that I joined INNOVADERMA, is that I could sort of see that new product development was a core strength. So I just wanted to quickly share a couple of examples of products that we launched just towards the end of the period, over November, December, through our DTC site, that are now rolling out to retail across the UK. But if I take the first, which is No-Tox Beauty Elixir, this again launched through our website. It was our largest selling SKU in December. It was sold at full price, and really it's a unique product in the marketplace. It combines a great plumping skincare serum with a natural glow of a gradual tan. And this again for me I think it's a great demonstration about what INNOVADERMA can do. It's offering a product that has a clear consumer benefit. It's offering a product that is not competing head-on with the big players in the skincare, or necessarily even in the tanning category, but is offering something that is unique and is something that consumers, when they hear about it, they go, wow, that's what I want to have. And I think it's just a great example of how we can get that under-catered for need, a unique proposition, and we can come up with something that ultimately I believe will continue to be very successful. In the same way, but in a different execution of that strategy, you have on the right there the Strawberries and Cream Whipped Gradual Tanner. There are many gradual tanners out there, but this really is a product that is challenging the convention of the smell associated with tanning. Again, it's appealing to both our existing users, but as well as new users, and its brand and gross margin accretive, being sold in at full price. Again, it launched on our website pre-Christmas, and has been launched in retail over through January and February. And ultimately, both of these products, I think, are great examples. They were actually our top 2 selling products on our website over the important December period. And again, they have continued to perform strongly post-Christmas. But I think what they do is they give a great example about how when you get great new product development that fits with the right brand and fits with finds a niche within the category, and that's when I think we have this winning success model on our hands. So I'll just now move on to talking a little bit about the financial results for the 6 months to December the 31st. So overall, as you will also been able to see in the results published this morning, the revenue was adversely impacted by COVID-19, declining by 19% to 4.1 million. Gross profit margin declined to 49.9%. Really, this is a continuation of the trends that we saw over January to July, and really is driven by the mix effect of higher DTC, higher direct-to-consumer sales, lower retail sales associated with COVID. Obviously, our direct-to-consumer sales have the cost of shipping included in gross margin. So really, that's a mixed impact. From a cash standpoint, our net cash position at December 31st stood at 0.2 million, which represented a 56% decrease versus the prior year. But I think important to note here, and really just to reassure all, since the period end, as we talked, the company has announced the placing to raise the 4 million and the the open offer of a further 500,000, and we expect that to sort of close towards the end of April, subject to shareholder consent. So overall, that's a picture of the financial highlights. I'll move on to really just talking about the impact of COVID. I won't overemphasize it. It's probably something that every company is having to mention, but I wanted to for our investors to understand really how it impacts the business. Firstly, it's accelerated the trend towards e-commerce, which is away from bricks and mortar, which I think is positive overall for the company. However, the category usage has temporarily been decreased. Ultimately, during COVID, during lockdown, etc., where social interaction has been reduced, we've seen an overall reduction in category usage of the tanning products, and in fact, many beauty products. It's something that's well reported by all the major beauty companies around the world. And obviously, in countries like the UK, where it's been more impacted by COVID, you see a more dramatic effect from that reduced social mixing. In fact, if you look at it, the UK's leading tanning retailer has shown that the tanning category over 2020, over the COVID year of 2020, is down 44%. So we believe that there will be that the historical consumption will return as social restrictions are eased, and in fact, we're seeing some positive early shoots of that as we go through March and as the weather warms up. So we believe that category consumption will return, but ultimately the shift to digital marketing and e-commerce that COVID has driven is something that we think is very much here to stay, and is something ultimately that we believe will benefit INNOVADERMA. So that's what I'm going to share from historical numbers. I'll now though switch gears to tell you how the new INNOVADERMA is going to grow rapidly in the future, and really to share some of my observations and discoveries in the first 100 days for me in the role. So on the left, you have some of the key findings from my 100-day sort of strategic review. This is a review that was conducted both internally but also externally through our retail partners, through our external stakeholders, and really sort of focused at looking through the business with 6 lenses: looking through the lens of products, looking through the lens of brands, looking through the lens of people and structure, looking through the lens of retailers and how they see our business, then obviously a financial lens, and finally a competitive positioning lens. So these 6 lenses basically enabled me to look at the business and come up with some key conclusions, that some of the most important of which I've sort of detailed here. And overall, those include, a lack of a focused strategic direction. I believe the company's been slow to respond to some of the changes in consumer behavior. There has been, I believe, too much of a focus on growth at the expense of profits. Insufficient engagement with shareholders is a theme that I've heard a lot, and is something that we will look to significantly improve on going forward. Probably one of the biggest findings is that there remains a huge growth opportunity in Skinny Tan. I believe historically there was a perception that it had grown and that it was reaching its max. I would argue in the global beauty world, a £10 million plus brand like Skinny Tan is still relatively small. As you think about successful global brands, you need to be starting to think in that hundreds of millions rather than tens of millions size. And finally, the strengths in new product development and digital marketing. Again, these really are key strengths that we want to continue to build on. So as you look at new INNOVADERMA, I've sort of shared, if you will, the mission and the DNA previously, and how actually the leadership team is probably the biggest change and the biggest driver of change and transformation in the overall company. But I think there are also some other elements that you'll begin to see, and these will be fleshed out in our strategy going forward. So firstly, it's more of a focus on sustainable, profitable growth rather than just short-term growth, irrespective of the cost. The second point is that, a realization that we are an e-commerce-led business. This is not to say that retail does not have an important part to play, but at our heart, we are an e-com-led business. Thirdly, that Skinny Tan is our number 1 brand and has significant potential to grow. It's our number 1 brand. It's proven in multi-continents. But again, I think we're still only touching seeing the tip of the iceberg, sorry, to choose the right analogy, of the potential that there is for Skinny Tan. The right leadership, the right team, the right skills, the right location is a mantra that I've been using internally. That's seen us move some key roles from Australia to the UK, but also I think with mine and with Andrew's appointments being UK focused, I think will enable us to ensure that our largest business, our UK business, gets the attention that it deserves. We'll optimize our e-commerce customer journey in a world where we're e-commerce led, and that is both our direct-to-consumer website, but also third-party e-tail sites. We will make sure that we are looking at every step along the journey that the customers make on that, and ensuring that we're optimized for that. Strong consumer insight-driven brands. I think the brands that we have at their heart are based off strong insights, but there has been a need to just sharpen that and ensure that we stay true to what those brands are, rather than chasing just what can sometimes look like the biggest opportunity in the market. And finally, enhanced shareholder engagement. Something that starts today, but going forward, we'll be looking for the right platforms, the right moments to share where we're going, but also I think to make sure that we have this honest, open, transparent discussion with people, ensuring that people understand where we're going and why we're doing what we're doing. I believe absolutely in engagement, and we'll be needing to work out what the right way to do that is. So we talked a lot about e-commerce, so I thought it was worth just sort of sharing why we think we are so focused on e-commerce. And obviously, e-commerce is the combination of our direct-to-consumer business, but also our retailer e-com business. both of these are strengths for Novaderma. So let me just tell you a little bit more about our direct-to-consumer business and why I believe there is this more global opportunity for both Skinny Tan, but also to use this direct-to-consumer vehicle as the right growth mechanism for all of our other brands as well. So ultimately, the Skinny Tan e-commerce model is now proven in 3 continents. In both the graphs on the right and the data on the right is taking the full 2020. So in a year that was, obviously had a COVID impact to lesser or greater degrees by country, but just shows that in the smaller markets, we can continue to grow despite the headwinds of COVID in those markets. And again, this is something that will look to continue these markets growing, but also we'll be evaluating further or complementary markets where we think the model can best work as well. We're not going to overstretch ourselves. We do believe that in the short term, the biggest opportunity is to grow both the UK as well as the US and Australia. But we're going to continue to look at where the right bolt-on markets might be. This data here is just for Skinny Tan. But again, our desire is now to take this Skinny Tan model and start rolling it out across other brands. In terms of the new brand development, we will take a more measured approach to new brand development, but whereby we launch our brands into their home market and then we optimize them. And what I mean by that is just ensuring that we have all of the right tools for future growth, but also ensuring that we have multi-cycle proof of concept for the brands and business themselves in terms of showing that we have the right repeat, we have the right product performance, basically that all of the ingredients are there for success. So we will incubate our new brands in their home market before we launch. And in our case, Charles & Lee is now, I believe, ready, has come through that incubation, has grown 50% in the period of these announcements to sort of show the potential of the business. And we'll look to now take that more to the UK, but also to look at how we can expand this into the US as well. So again, I just thought it was worth sort of sharing why I believe this e-commerce and with DTC at its heart is the right model for us. There are further areas of value creation too that I've sort of identified and that we'll be looking to maximize as we go through the coming weeks and months. Firstly, improved operational efficiency. Again, gross margin is a key focus of mine. And I've already touched on the fact that we now have a global promotion strategy, which really sets clear parameters about how we can talk about product gross margin. We're also looking to increase inventory efficiency, both lineup simplification for some of our brands, really looking at our rates of sales and ensuring that we're trying to direct consumers to our fastest moving lines and really build some hero SKUs, but also systems integration with our ERP system, and also evaluating warehouse optimization. The third point from an operational efficiency standpoint is improve and future-proof our global direct-to-consumer packing, logistics, customer service operation. We are, particularly in the tanning business, there is a very seasonal business, so we have to have a model that can flex to varying different levels of demand. We believe that we've got the right partners in place, but it's now just a question of trying to ensure that the systems are bulletproof in a world in which we live. And really, when we call ourselves an e-commerce business, it's going to be how can we ensure that we have that excellence in e-commerce, logistics. A second key area is digital customer acquisition and brand building. So we have an existing digital advertising model that delivers a strong ROAS, or return on advertising spend. We're not, though, resting on our laurels. In a world where the boundaries are constantly moving, we're moving from more of a Facebook-focused model to more of a multi-channel digital model, making sure that we're utilizing the highest returning, the highest ROAS, the highest return on spend channels to deliver the right customers. Looking at what are the right channels to drive new customer acquisition, but then what are also the right channels to drive retention of those customers. So again, something that I will probably share in the future in a bit more depth, this model is sort of evolving from a very successful but very focused on Facebook model into a much more nuanced model, which we believe ultimately will deliver us a significantly better return on investment, but also will future-proof the business by not being so reliant on purely Facebook. I mentioned there also upgrading our website in 2021. The the Skinny Town upgrade went live just a couple of weeks ago, and we'll be looking to further improve both the Skinny Town sites around the world, but also Charles and Lee over the coming 6-month period as part of our technical roadmap. And finally, step change our brand storytelling capabilities. Overall, as you look at maximizing your return on investment, it's about getting in place the right strategy and the right tools, but then it's also ultimately, from a marketing standpoint, ensuring that your message is as strong as possible. We have a lot of experience in terms of understanding our direct-to-response marketing model. We're now just trying to overlay that with an even stronger marketing brand storytelling capability, ensuring that we have things that are both communicating our offers, which will remain an important part of our proposition, but also doing that in a way that builds brand equity at the same time. Finally, the third pillar of value creation is really product innovation. I talked about it at the start, but I also wanted to come back to it at this point because I do believe that it is the heartbeat of the business. You know, Skinny Town changed the rules of the game with the launch of Wonder Serum. We will be moving to now a 2 years out planning horizon, where we're really looking at what are both the major category breakthrough opportunities that we have that then complement some more of the traditional innovation. So again, something you'll hear a lot more about going forward. I'll share a lot more about our innovation because I do think it's important as the key driver of the business. And it's not going to be about the numbers of innovation. Sometimes beauty companies come out and tell you how many different SKUs they've launched or how many this, that, the other. We're trying to focus on ensuring that we have the highest return on that innovation. And that's going to be about making sure that the innovation all has a strategic role to play for the brand, but also that we're making sure that we invest the right amount and that's of time as well as investment in trying to deliver the next product that will change the game. I would argue that the No-Tox Beauty Elixir is one of those. But again, we've got a really exciting pipeline now that stretches out 24, actually probably more to 36 months now, that really shows that the future is very bright in terms of the new product development cycle. So that just brings me to the outlook, moving forward. And whilst the pace of macroeconomic rebound remains uncertain, the board and myself remain very confident that historical product consumption levels will return as social interaction restrictions are lifted. Ultimately, if you look at the new INNOVADERMA, which I think I've hopefully given you a flavor for today, and we will continue to flesh out and share more with you over future meetings, I believe that we've got the right team in the right location with the right skills and the right strategy to capture that growth. But importantly, it's not just about having the right strategy, it's also about having the right fuel. I think we've got a margin accretive new product development. I think we've got an optimized e-commerce focused model with both enhanced execution in terms of what the consumer sees, but also enhanced digital marketing return on investment. And finally, we've got sufficient capital to fund the strategic investment and growth in both existing and new markets post the fundraise. So I think, again, we have the right ingredients and we should be very optimistic about the future. So in closing, I think we have the ability, the opportunity, and the ambition to become a global, digitally enabled, e-commerce focused consumer beauty brand and business. I hope that has been interesting. I thank you, and now I'll hand back to Paul, and we can talk some of the questions.
Fantastic. That's great, Blank. Thank you very much indeed for the presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. Just while Blake takes a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via our Investor Dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order the company can better understand your views and expectations. Blake, as you can see, we've had a number of questions come through on the Q&A tab there. So may I ask you just to click on that and just read out the question where it's appropriate to do so and give your answer? That'd be fantastic.
Sure, I will do that. So first question up is from Pat Yu. And the question is, how do you do innovation? Do you have labs or outsource? What is the annual innovation budget? So from an innovation standpoint, we have the project management and the definition of the innovation is led internally. We have a new product development manager who really sits at the heart of this. They don't do it all on their own and in a silo. They act as the hub for the inputs and insights from the whole business, but then ultimately the product development, the chemistry, if you will, is done through our third-party manufacturing sites, and they do the chemistry, but we are the ones who give them the brief and ultimately deliver, choose the right products. So, if you will, what we outsource the science, but we give that science a very strong direction from internally. I've got a second question, again from Pat Yu, thank you, that says, any issue transferring activities from Australia to the UK? I see the Skinny Tan Facebook page is still INNOVADERMA Australia US Limited is responsible for this page. I also see there's been a flurry of tweets in the last 24 hours from the Twitter channel. So ultimately, again, this has been so firstly, have there been any issues? No. In general, the transfers worked well. I will not lie that the time difference at 11 hours up until we changed our clock recently makes coordination with with Australia challenging from a time zone standpoint. But actually, the tools you have now with Microsoft Tools and Microsoft Teams, etc., does make it reasonably seamless. In terms of our UK-based social media, again, one of the key roles that we have staffed within the last month is to appoint a head of UK social media. And so that person joined really just within the last 2 or 3 weeks, and she will be owning our overall execution from an organic standpoint as well as our PR and influencer world. So again, I think what you will see over the coming days, weeks, months is an even strengthened focus on UK being run out of the UK. That includes relooking at our Twitter channel as well as leveraging the ongoing discussions that are already strong in the likes of YouTube and on TikTok, where the hashtag SkinnyTan is performing exceptionally strongly. So again, a lot more to sort of come, but we've now got the right team, I think, in place for that. A lot of the questions have come from Pat Yu. Is the proposed share issue strongly supported by institutions? I think overall it was oversubscribed. I think that's the key piece for the initial placing. And I think we've got some really excellent and strong new partners on board. So I think that's very exciting. So yes. Let me try and get a can you give a sense of scale from new products? What percentage of sales are they running at? How may they impact sales numbers going forward? So it's hard to give an exact percentage number, as they can basically they do go up and down in any given week. To give you a bit of a sense of where I look for, new product development over a more extended time period, you'll be looking in that 15 to 20% would be, in any given year would be a good starting point, I believe. It really depends sometimes on the timing and what you've got in the base. We're seeing probably over that at the moment, particularly on our website, but also we're seeing some very exciting initial numbers coming out of the retail world for some of the performance of the new product development. So again, something that I think is, shows the potential, and particularly with the warm weather coming out, we're hoping that the tanning category will even more jump back into life over the coming really weeks. Nedge, are you able to comment on the recent approach from Crichton's and explain why the board didn't entertain the approach, which I believe was the right move? Overall, the board will always review any approach to the company, and at its heart, we just believe that the Crichton's offer fundamentally undervalued the business. Ultimately, we believe that there is a lot of opportunity for growth in the business, and we also believe there's a lot of opportunity for growth, in the share price. I would direct people to have a look at the note that I saw from FinCap this morning that talks a bit more about historical or sort of category-wide valuations for businesses, and why we believe ultimately the offer from Crichton's undervalued the company. Let me go down again. Sorry, let me go here. Can you get back to 60% gross margins? Moving forward, I do expect our gross margin trends to improve and to get back towards our historical levels. Ultimately, the absolute gross margin is somewhat dependent on the mix of business we have between different countries. But the direction of travel, when you combine strong direct-to-consumer business with a strong retail business, we should see a return towards historical gross margin levels. I wouldn't like to place an exact number on it at this stage because, again, a lot of it can depend on what the growth is that we see out of the US, for instance, versus Australia, etc. But overall, we build country-specific profitability models so that even if the gross margins in some markets might be lower or higher than others, we look to cut our cloth from a costs and investment standpoint accordingly to ensure that we still continue to deliver a right bottom line number. So I think particularly with how how gross margin can be impacted by the cost of shipping, etc., in certain markets, I think it's important to look at both gross margin as well as ultimately our EBIT numbers. How is Nothing performing? So Nothing is I wouldn't say one of the most unlucky brands, but obviously Nothing launched a year ago in the first week, basically, of lockdown. So both ourselves and Superdrug believe that we haven't been able to get a clear read on the performance of the brand to any greater or lesser degree. So ultimately, we have just launched some new innovation with the kiwi scented leg wax strips, which are doing very well. But ultimately, we're looking to get a real clear read on Nothing performance moving forward, as this category consumption, the hair removal category is very similar to the tanning category, that in a socially isolated way has led to overall category reductions. So both ourselves and Superdrug are looking at the coming 6 months to really understand more about how exactly, how is the performance of Nothing stacking up. From the interim report and this presentation, it sounds like you'll be divesting Life Science Report. How will you ensure you get a good return for shareholders? Our Life Science division is currently under strategic review. As I said, when I joined the business, I've been looking at all aspects of the business and life sciences, including life sciences. As part of that, we are doing a specific drill down into life sciences, where we'll be looking at trying to understand the exact synergies that it has with the business, but also looking at how we can maximize shareholder value for this going forward. There's nothing to report at this moment. There are no plans to divest it at this moment, but we are looking at the overall approach we're taking is looking at how can we maximize shareholder value. Why was the Crichton's bid turned down? I think we've answered that one. So what is the split between DTC and high street sales, and how do you see that evolving? Really, that's a question that differs by country. If you look at both Australia and the US, which are newer countries for us, we're really leading with our direct-to-consumer. So that has a higher percentage direct-to-consumer, higher percentage online business than our more established market of the UK. But equally, as those markets mature, we would be looking to complement a strong direct-to-consumer business with a strong retail business. That blended approach, where we basically drive much business through our website as possible, but we also enable consumers to pick up our products, be it them in physical stores or increasingly through the likes of Amazon, is an important complement. So that, in terms of the phasing, it will usually start with direct-to-consumer, then move into a bit more, add-on, bolt-on retail as part of that. If you look at our overall for the period we're announcing today, and as shared in the probably not in the presentation, but actually in the statement that's gone out this morning, overall 62% of our sales go through the company's direct-to-consumer channels. And obviously, if you include on top of that e-commerce, that number will become even higher, so that you're talking probably 80% plus from an overall e-commerce standpoint, once you take into account Boots.com and the Hut Group, etc. So you can see why this is our key focus going forward. What else? I just want to make sure I don't miss any of them out. In 2 to 3 years' time, what can you see sales reaching, and what net margin? Obviously, I'm not sharing a specific growth targets at this sort of time. I would just direct investors to have a look at the FinCap note. That would be my first point of call if I were you guys at this time.
I think you've pretty much covered all the questions off there, actually, Blake, unless there's anything else you can see.
Okay. I'll hand back to you then, Paul.
Thank you, and thank you very much for addressing those questions. And if any further questions do come through, Blake will be able to review those post the event itself. Blake, perhaps I could just ask you for a few final words to wrap up before we redirect investors to give you some feedback, if that's okay. Yeah, so look, ultimately, I joined INNOVADERMA because I believed it had the brands, the products, and the growth opportunities that I look for. And I believe today those opportunities exist and are probably even more plain to see. There's no doubting that COVID has had a profound impact. If I look at the performance of the company pre-COVID, it was very strong. We've obviously been impacted by COVID, but I believe that hopefully what I've shared with you all today, you will get a sense of my optimism for the future and why I believe there's a lot of reasons to be very positive about how we can exit from the pandemic as both a financially stronger, a stronger leadership, and I would probably argue a day-to-day hand on the tiller, as well as ultimately a digitally enabled e-commerce focused business. I'm very excited about the future. I hope you are as well. That's fantastic. Thank you very much indeed, Blake, for updating investors today. Could I please ask investors not to close the session, as you now be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear, but if you've accessed the meeting via the link sent to you in the email, simply be asked just to log back in. If you would take just a few minutes to do so, it'd be greatly appreciated by Blake and the team. On behalf of the management team of INNOVADERMA PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good morning.